most of the people were saying that this was likely to be a up year. And why? Because last year was a big down year. In fact, it was one of the worst years ever. I'll get into that in a moment. But because the market was so weak in 2022, historically, when you have a down year, it's followed by an up year. So everybody just assumes that history is going to repeat, and they have absolutely no conception of why the situation is very different now than it was following prior down years. First of all, yes, the stock market was down big in 2022. In fact, the S&P had its biggest annual decline since 2008. But it's not cheap. If you look at the PE of the S&P, even after a near 20% decline in 2022, it's still trading at around 20 times earnings. That's not cheap. In fact, that is expensive for stocks. If you look historically at stock market valuations before the 2000 stock market bubble, before Alan Greenspan was there artificially suppressing interest rates and blowing bubble after bubble, with each successive Fed chairman adding more pages to the same playbook, the average PE on stocks was maybe about 15 or 16 times earnings. When stocks went below 10 times earnings, that's when they were cheap. When they rose above 20 times earnings, which they did occasionally, they were expensive. That's where we are now. Now, yes, we did maintain high PEs with 0% interest rates and quantitative easing. But if you're looking at that in the rearview mirror, with the Fed hiking rates and fighting inflation, we should go back to a normal PE. We shouldn't be staying at these absurdly high valuations that were a function of monetary policy that, at least for now, no longer exists. But what's even more important than the historic PE is the fact that the E, earnings, is inflated and is going to come down. U.S. companies are not going to be able to maintain current earnings because those earnings were manufactured in an era of artificially low interest rates. We're likely to start the year in a recession. In fact, I think we were in recession in 2022, but nobody wants to acknowledge that. But just about everybody who is in denial of the 2022 recession expects a recession in 2023. Yet they still expect the stock market to do well, even though we're going to be in recession. Why? Well, first, everybody expects the recession to be very mild and very shallow. And that's where they're wrong. They're right about the recession, but they're wrong about the severity and the depth. But also, one of the reasons that so many people are confident that the recession is going to be short and shallow is because they also expect the Fed to come to the rescue by going back to QE and by reversing the rate hikes with rate cuts. But even if it does that, it's not going to be a good year for U.S. stocks. The real risky stocks, like the ones that Cathie Wood owns in the ARK Innovation ETF, that ETF was down 67% in 2022. And it closed the year 80% below its 2021 high. And even though it was down that much, in 2022, the ARK Innovation Fund had net inflows. Investors kept putting money into the fund despite the fact that it was down 67% on the year. So nobody threw in the towel. Nobody took their chips off the table and left. That is a negative sign, because if you're looking for capitulation, there was none. Investors kept averaging down in this fund. I think in 2023, you're going to get that capitulation. You're going to see net redemptions out of this fund. And now Cathie Wood is going to have to sell all these stocks because she's been a buyer of these stocks, even though they've been clobbered and most of her stocks are at 52-week lows. That decline came despite the fact that she's been a steady buyer all last year. So when she turns into a seller, having been the biggest buyer, look out below. A lot of these stocks are going to collapse from here. Even worse than the ARK ETF was the performance of the Grayscale Bitcoin Trust, which is also one of the holdings in the ARK ETF. But the Grayscale Bitcoin Trust finished the year down 76%. 8%. That is an enormous decline, especially if you consider that the Grayscale Bitcoin Trust was marketed as an alternative to gold, as a safe haven, as a store of value. Gold was actually flat on the year, maybe down a few bucks. It's hard to say. Silver was actually up about 2.5% on the year. But being flat is a whole lot better than being down 76%. Bitcoin has no return at all. I mean, you're pretty much certain what your return is. It's zero, because Bitcoin doesn't pay interest, it doesn't pay dividends, it doesn't pay rent, it pays nothing. So it is pure risk, but really nothing can happen. I mean, I guess the gamble that everybody is making on Bitcoin is that it'll become a safe haven asset in the future. It's not a safe haven asset now, but at some point it's going to magically transform itself from a high risk asset to an ultra low risk safe asset. Now, I don't really see how it could possibly make that transition. I don't even think it's possible for it to happen. And so what is the point of Bitcoin? If it's just a risk asset, when it was an alternative to gold, okay, you could buy gold or you could buy digital gold, gold 2.0. They were arguing that Bitcoin was better than gold. But can you argue that Bitcoin is better than all these stocks in the NASDAQ, each and every one? If you want a risk asset, why not bet on one of these companies that could do really well? Or there's 20,000, 21,000 other cryptocurrencies. They're all risk assets. So who's to say Bitcoin is the best? Because if it's no longer digital gold, if it's just a risk asset, then how is it different than the 21,000 other risk assets that we used to call cryptocurrencies, but now they're just crypto? We kind of dropped the word currency, because whenever I hear anybody talking about cryptocurrencies, they don't even use the word currency anymore. It's just crypto. Like crypto what? Like there's any value there? There is no value there. So Bitcoin failed as a currency, then it failed as digital gold, then it failed as a non-correlated asset. I don't expect it to have any better luck as a risk asset. It's not going to succeed as a risk asset either. It's going to fail again. One of the things I think was interesting too about 2022 is just like none of the diehards in the Cathie Wood ARK Innovation Fund, they didn't throw in the towel. They didn't give up. They still worship their Messiah. The same thing in crypto. There is very little nervousness. I mean, people are upset that, they've lost a lot, but they haven't given up. They still expect Bitcoin to make new highs. I mean, any day now, it's going to be a moonshot. So we haven't had any capitulation really in Bitcoin. Now, some people have lost a lot of money because they had their crypto in an exchange that went bankrupt. And so they lost all their money that way, but they didn't sell out. And so I think that again is going to happen in 2023. I think you're going to see a big capitulation among the HODL gang. You're going to see a lot of people selling Bitcoin. And that's why I think the downside is significant, much below 10,000, probably even below 5,000. I don't think Bitcoin is going to zero out in 2023. I do expect there's going to be some people buying on that huge dip, as they always have. It's just going to be another big dip. But I think eventually that's where Bitcoin is headed. And I think that's going to be ironic because the year that Bitcoin is really going to break down, which I believe is 2023, not 2022, that's when I think gold is really going to shine.